This is about as stable as I've seen Palo Alto in many, many months. It is vulnerable though, and that's what we're going to be covering in today's Bay Area Housing Market Minute. The Bay Area housing market has been on absolute fire. This is not front page news. However, there are some markets in the Mid-Peninsula and really some are higher end markets all over the Bay Area that have started to exhibit signs of a slowdown. Palo Alto is not showing signs of a slowdown, and we're going to be covering that in today's Bay Area Housing Market Minute. But before we go into the data and before we get into the numbers, if you're a home buyer in today's marketplace and you're looking for a comprehensive data set to assist you in your purchase making decision, you can go ahead and text the word data plus the zip code or the area or the neighborhood that you're looking in, and we'll get that data sent straight to your inbox. And if you're a home seller in today's marketplace and you're looking for a data set to help you in pricing your property now more than ever, pricing strategy absolutely matters. So you can go ahead and text the word data plus your property address to the number down below, and we'll get that data sent straight to your inbox. Palo Alto was one of the only cities to truly suffer during the first half of the COVID shelter in place. And really, we are starting to see a stabilization, just kind of like a very steady marketplace in Palo Alto. Nothing fancy, nothing too high, too low. And that being said, I believe Palo Alto is vulnerable. And I'm going to share why in today's Bay Area Housing Market Minute. When you look at the this first graph here, this is for sale versus sold inventory versus pending sales. So the pending sales represented by the red line. And you'll see that really for 10 months in this graph, the first 10 months or so, and even before that, we had a situation where pending sales were underperforming or underneath active inventory levels. Now, this is not bad, by the way. Like if we're in 47 states out of 50, this is great. And if we're in like 99% of other metros, other cities, this is not a bad market. This is simply just like an average market. But because we're in Palo Alto and because we're in one of the hottest cities in the hottest markets in the world, that was underperforming. And relative to everything else that was going on in the Bay Area, we were seeing it was super vulnerable, super weak. And that script flipped in March of this year when everything really just started to take a turn to the moon, really. And so we had 67 homes pending and 66 homes on the market. That was the first time that we saw that in not even the last 10 months before that, but even the 10 trailing months before that too. So there were many, many months, over a year, where the market was underperforming relative to the standards that we're used to seeing Palo Alto perform. Now, over the last 1, 2, 3, 4, we've had fluctuations where it's just a little bit under, a little bit over. Anything above a 33.3% pending to active inventory ratio is considered a seller's market. And so, 63 to 75%, that's not anywhere close to 33%. In fact, we have this graph here. This is sold data, so it's not pending sales, but it is sold data relative to the number of homes that are active. So this is absorption rate based on sold metrics, not on pending metrics. But even in March of this year, 72% absorption rate, 97.3%, 78. Finally, in June of this year, we had over 100% absorption rate. I say finally simply because relative to most other cities in the Bay Area housing market, we have seen not just 100%, but we're seeing 200, 250, 300 in some cities. But why is Palo Alto still just stable? Why hasn't it just come back with a roaring, like the roaring force that we know it to be? Well, truthfully, I think there's a lot of reasons for it, and I won't get into all of these reasons in today's video, but we still have not recovered from COVID. Bottom line, we still don't have the demand that we're used to seeing in Palo Alto because not everyone is going back to work. And a lot of the people that were living in Palo Alto made a conscious decision to move to the East Bay, get out of the rat race of the Mid-Peninsula and go buy a 3,000 to 4,000 square foot home with all the amenities and features that they could ever dream of for a fraction of the price that they're going to pay in Palo Alto. And so we aren't getting those buyers back here in Palo Alto. And I know that that sucks to hear, but it's true. And so I honestly believe that this is going to be a 3 to 5 year cycle now that we're starting to come back out of COVID. And I pray and hope that we don't go back to the way things were. And during shelter in place, that we're able to go back to work and people are able to enjoy their lives mask free at some point. And that being said, 3 to 5 years is honestly what I believe the turnaround is going to have to be in order for us to see a resurgence in the demand that we were used to seeing pre-COVID. Why? It's going to take 3 to 5 year turnaround for us to have enough new blood, new employees in the ecosystem in and around the Mid-Peninsula in order for us to see the demand that was there pre-COVID, because, typical real estate cycles, 7 years. And so we're going to need 3 to 5 years to start to see some of the renters that are in that area start to become homeowner eligible, right? Start to have enough money in order to buy homes, and finally, get their home in the Mid-Peninsula. Those buyers aren't going to buy in the East Bay because they're now no longer going to be lured away by the false sense of hope that they're never going to have to go back to work ever again. My prediction, and I think a lot of us can agree, that most workplaces are going to have a blended come to work from home situation. And those that don't will offer lower compensation packages for living remote. That's not news. That shouldn't be news to anyone watching this video. So I expect Palo Alto for the next 3 to 5 years, we're going to continue to see this slight fluctuation where we see some months where it's good, some months where it's, decent, some months where it's bad. And I just expect that to be the norm. What could shift that in either direction? Well, if we have a couple of great IPOs for tech companies that are located in and around the Mid-Peninsula, we see a quick surge in cash in those areas for buyers in those areas. We could see that timeline accelerated a little bit on the pending side of things to where we see more buyers enter the marketplace than we would have expected to see. So we could see that accelerated a little bit by future IPOs that kind of accelerate that 3 to 5 year timeline, maybe make it more like 24 to 36 months as opposed to 36 to 60 months. Or we could see pending swing the other way if enough luxury or higher end marketplaces around Palo Alto start to suffer. And we see some of the demand go from Palo Alto into other marketplaces because they see more value in other marketplaces in those surrounding neighborhoods as opposed to living in Palo Alto proper. We've seen it happen in other areas before where that's happened. And so I wouldn't be shocked, I should say, to see that happen again, simply because there's not enough buffer for me to say with 100% confidence that this market is safe. We have 57 homes pending this last month versus 62 homes on the market. So we're already below 100%. We're at really 90% or so. So the market really only needs to dip about 50 points on the pending side of things. And if inventory levels stay the same, the market really only needs to dip 50 points on the pending side, which isn't a ton. And so I wouldn't be shocked to see the Palo Alto marketplace to continue to stay stable and neutral over the next 24 to 36 months. And if you're a home seller and you're watching this video and you disagree with me, feel free to leave a comment in the comment section down below. And if you do agree with me, then the question becomes, well, when is the right time to sell? And the right time to sell would have been in May of this last year, when you start to see activity levels ramp up, or when you start to see less competition in the neighborhood, is when you're going to want to put that home on the market to optimize your chances of success. This is Danny Gould, everyone, with the Selling Silicon Valley Group, and I look forward to seeing all of you in the next video.